Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. Time for another update. And this is where we are after 2 days of trading. Huge push up to start the week. Straight up into some overhead resistance areas on some of the indices. Not all of the indices were met by this. And today was followed by absolutely nothing, actually, until about the last 45 minutes of the day. And then we did see a drop in the Dow, the SPX. The NASDAQ stayed pretty strong, as it did actually all day long. It did drop at the end of the day, too, but it didn't have much movement to it, to be quite honest, until, like I said, the very last 45 minutes of the day, and it finished about break even. Apple being a big part of that. It's just a monster right now, straight up. Follow Apple quite a bit in the newsletter. Love what I'm seeing out of it. We had trades up and above 610 today, and it's just been, pretty simple to make some money on Apple actually lately. And it is pushing the NASDAQ upwards and upwards some more. So until Apple decides to pull back, I'm assuming that the NASDAQ won't either. It's going to stay relatively strong. So for those of you that like to follow the NASDAQ, I never recommend necessarily shorting the NASDAQ. I'm not a big shorter of the NASDAQ. I like to save that for the other indices. Good risk management, good caution is to be used here. We are very overextended, but at the same time, as long as Apple continues to push itself upwards, you NASDAQ lovers can probably continue to stay long as well. Just make sure your stops are in place. You never know when this thing's going to turn tail and run the other way. You don't want to get caught in the rush when it does. Otherwise, you'll be stuck there wondering, what do I do? Do I stay in? Do I get out? I'll wait for a pullback, and the pullback never happens a lot of times in these really hard pushes down. So be very cautious. Just use good risk management in through here. As for the indices themselves, you'll notice that the Dow came up into overhead resistance. Now, got a couple things burning here. Potential inverse head and shoulders, which I'm not particularly fond of, but it is what it is, and it's there. So we have to respect it for the time being. The other thing is a potential double top too. So until we can break that 13.3 mark, really have to look at it as a potential double top at this point. Keeping in mind that it has been weaker than the other indices. The other indices have all broken to new highs. So no reason to think this can't do it either. We can talk about non-confirmation and on and on and on, but the truth of the matter is, as it is right now, the chart is a potential double top. So be watching this over the next few days of trading. Here's the daily, and you can see that huge push up yesterday, but once again, right back into overhead. What are we holding at? The 20-day moving average. This has been a beastie beast right here. This is still the thing to break and something you have to be conscious of. Going forward. If the Bears decide to take this thing over, this is one of the first lines in the sand you'll want to watch very cautiously. Other than that, I don't know. Are we up to a new high? Maybe if you're an Elliottian type person, could be some sort of a consolidation in here. Maybe it turns into ascending triangle. It's really too early to tell. Just keep in mind that yesterday was a huge push up and today was a minor push back down. So there isn't anything necessarily broke from the bull side quite yet. Still have to give the bulls the benefit of the doubt here. Moving on to the NDX, beautiful TA right here. Saw a break, come back, retest, test, and hold, and at the end of the day, plop, dropped right down. Any further pushes to the downside, I'm really not too worried about the NASDAQ until we start to break some of these lower levels like 2,700 and the 200 down here. Otherwise, watch this very carefully. This has been money. We've been following this line actually quite a while in the newsletter, and this has worked very well for us on a number of different indices. So I'm just starting to introduce it to the daily video users. I want you guys to also mark this and make sure you keep it handy. It's worked very well as overhead resistance so far. I would expect this line to hold too. So we might, one big push, maybe up and above it, but I don't think it's going to last very long before it starts to pull back below it again. So watch this very carefully for those of you that like a little bit of, the word I'm looking for is if you want a little bit of opportunity with your trading, this is the bar, or if you will, the line of opportunity. So good places to be watching. You can see it'll trail this line, but eventually does tend to fall off from it. So if we revisit it, I would expect that same type of action to happen. NASDAQ daily, look at this. True to form, just as we're seeing on the 60-minute. This is another line I've had in the newsletter here for a couple of months now, and you can see how strong this line has been. not only from a support standpoint, but now from a resistance standpoint. Once again, retesting of this does not mean that we can't go higher. However, it does tend to put some restrictions, if you will, on how high and how fast and how far we will go. This is just a really good guideline to use for those of you that like to draw lines in your chart. This is one you really, really need to have from your NDX once we start to see this drop off. Maybe something more bearish can come of it, but as of right now, the bulls don't care. They're just using it on the back side of it instead of the front side. So still a good, strong move by the bulls overall, and the weekly proves that as well, as we have been basically parabolic since the beginning of the year. If you went long the NASDAQ, so if you're a QQQ player, if you went long the Qs back in December or even November, all you had to do was basically walk away. It's nothing but white candles all the way up. Very, very pretty chart from a bullish standpoint. However, very, very overbought. Must be very cautious up here. Once again, use good risk management. Have your stops in place and find a plan and stick to it. This is the best advice I can give to you, especially if you're a new trader or an amateur trader. Having a plan and sticking to it is extremely difficult for most new traders, but it is absolutely necessary for successful trading. You really have to have a plan. Eventually, this is not going to go up. It's going to go down. You have to know what you're going to do when that happens. Make a plan, stick to it. Don't get scared out of it. SPX 60-minute on to new highs, dropping back into the day. As you'll notice, not doing the double top thing. It is breaking to new highs as we saw the NASDAQ do. Not quite as strong, but exactly where it needs to be, kind of in between where the Dow and the NASDAQ are. Very common for the SPX to play. Don't know if you want to count this in any way, shape, or form. I'm not even trying at this point. We're just waiting to see where this thing goes. Now, at the end of the day, we had a good pullback. Even after the market close, we had a good pullback. For those of you that like to watch the futures right now are couple points down from where we closed the day, so nothing major at this point, and coming into some lower support. But if you're a futures player, 1400 is really, really good lower support right now. Just want to be very conscious of that. Have that marked on your charts going forward. Otherwise, on the SPX side, looks like it, and I'm just going to call it what it is. Just another bull pullback. That's all we've seen so far. So why try to run against the bulls right now? I guess I would like to see a little bit more bearish action come in so we can reload at a lower level and maybe get in on the bull side. But the bulls have not allowed the bears up for air. So you must be cautious here if you are bearish. Don't get too over bearish and hope that this is the drop or whatever the case might be. Let it play its part. 1385 is what I'm really talking about with most of my people. 1385 is the area to watch carefully. Big, big, big area down here. Then, of course, the 200-day moving average and some of those, which are way, way, way down here. I don't know if we'll see this anytime soon, but on a major, major drop, this would definitely be one of the targets that'll be watched closely. Until then, it is by far the 20-day, 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 pound it into your head. Here's this overhead. We've been following this channel forever too, and notice how nicely it has worked. Every time we get up to it, fall away, come up to it, maybe trail it, trail it, trail it, trail it, but I do expect maybe to fall away from that eventually. We could see a pop above it, but I do believe this blue line will eventually win out. So very, very nice look at a beautiful channel as we follow it to the upside. The VIX, this was very curious. I want to tell you guys about this. You know how I feel about the VIX. Usually between 15 and 20, it shows a lot of complacency in the markets. We're at the bottom end of that. So until we get back above 20, the markets are pretty complacent. There really isn't a lot of fear in the markets. If we see a major drop, you'll see this VIX rise. Here's the point to take into consideration today. Major move today, not only in the VIX, but in the VXX, which is basically, roughly the same thing. But the VIX had a huge move up of 9 to 10%. VXX, same thing, 10%. The markets really didn't go anywhere. So as a bear, what you want to see is the VIX spike and a coinciding drop in market prices. We didn't really see that. We saw a little bit of market action towards the end of the day, but overall, the VIX had a huge run up, and it looks like it maybe just is setting up for more room to the downside for the VIX to go right back down again. So I'm going to give all advantages to the bulls because they have been the wieners lately. They've been the ones to beat. So I'll give them every advantage at this point and tell you that I'm not real interested in this whole VIX thing until we get back above the 18 to 20 mark. Then maybe we can start talking. And it has to coincide with a drop in the markets. Otherwise, I really don't care at this point. VIX weekly, same thing, consolidating down here. Some of the lowest levels we've seen since 2007. This print of 13, yeah, go back to mid 2007 and you'll finally see a print below 14. It's been a long time since we've seen these low prints. So, will that lead to anything? Is it a precursor for anything? I don't know. I mean, we are very overbought. We are due for a pullback, but that doesn't mean it has to happen now. Doesn't even mean it has to happen this month is the end of this week, but doesn't mean it has to happen within the next 60 days of trading. Just something to really, really keep your eye on. Keep in mind, low VIX, lots of complacency in the market. FAS showing some interesting patterns. Looks very much like the NASDAQ, does it not? Gee, go figure. So straight up, break, come back, holding. Dropped a little bit at the end of the day, but of course doesn't mean we can't head to new highs, but it does show that maybe we are starting to see a little slow in momentum right here. FAS looking very interesting from a financial standpoint. I always like to follow this to get an overall idea of where the financials are currently at and what the current consensus is. The financials were the second biggest dropper today. Boy, that's really bad. I didn't mean to say it that way. Sorry. But it was the second weakest sector today. How about that? Energy being first. So energy and then financials. And you can see it reflected right here in the charts as well as FAS rolled over a little bit. Now, stuck in a range. You're looking at 104 and 1, really, well, kind of 113, but let's call it 114. 104 to 114 makes a nice $10 range. This has been stuck in this range for quite a while. We can go all the way back to here, and that's the middle of the month when we entered this area, and we've been stuck there ever since. So watch for these breaks. 104 and 114 will be your heavier support and resistance areas. Here it is on a daily. Looks very, very clean as well on a daily. Keeping in mind we have the rolling 20-day coming up. Get back into the 104 area. Look to see where that 20-day is at. But 114 and 104, the next areas. Support and resistance going forward. Now the FAZ struggling with this particular trend line right here. And finally, after 1, 2, 3 hits, maybe we get a break of it. I don't know. Something you definitely want to keep on your charts, though, especially if you're FAS long or your FAZ short. These are very, very big trend lines to be watching from both sides. Now the FAS has already broke and come back and retested and gone. This one has not. So this one is stuck in a range of its own, though, keeping in mind that because it's a less expensive stock, obviously 20 and 2150 is its range here. So you want to keep that in mind as we proceed forward. Watching closely these moving averages that are now starting to roll their way down in here and see if we can get some market sentiment change within the financials themselves. I don't know if there's news on the banks or whatever, but keep in mind GDP comes out on Thursday. I think jobless numbers are out, along with petroleum won't make much of a difference, but I believe those GDP numbers could be major for the markets. You want to watch very closely early Thursday morning is when they come out. It's not real early if you're East Coast. That's 8:30, but it's 6:30 my time here in the Black Hills. So it's early. It's early for me. So I'll more likely be up to see what those numbers bring us. But you can see what we're doing down here after a huge plunge to the downside. Looks like we're finally maybe starting to get some traction down here. I'm not so sure I'm ready to jump in quite yet, but it is something to keep on your charts, keeping in mind that we've done nothing but drag this lower blue line for a long time. So if we could get any kind of a bounce, yeah, I think maybe we could see some bearishness in the market, some bullishness come back into these bear ETFs that everybody's been trying to chase for a long time. Even myself, I've been only able to pull a few dollars out of TZA. As a disclaimer, I'm still long a little bit of TZA. As it stands right now. But it's been very difficult to make a lot of money if you haven't been long or if you haven't been short these things. If you've been long TNA or FAS, you're doing great. It's been pretty easy. They're just rolling these things up. Keeping in mind, though, the weakness continues in the bear ETFs. Will they find a bottom? Yes. When is that? I don't know. I don't know if that's today. I don't know if that's next month. You got to be so careful with these. Don't guess at a bottom. You're going to blow up your account. Probably the number one thing I see from amateur traders is they get stuck in a bad trade and it just bleeds them to death. Don't be that person. So be very careful. All right, that should wrap it up for this week. Well, hopefully not for this week. I'd love to do another one on Thursday. I've got to get better about doing 2 a week for you guys. Hope you are still enjoying the videos themselves. Once again, we have the subscribers newsletter. I do some mentoring. If you guys are interested and really want to learn how to trade the markets themselves, let me teach you about risk management. Let me really teach you. When you look at a chart, let me show you precisely where you get in and where you get out and where you put your stops, and let's work a lot on that risk management side. I can't even stress enough how many people I hear from that blow up their accounts because they just didn't know when to get out once they got in. And I could have had this amount of profit and I held on to it and then I took this much of a loss. We can fix that. We can fix that. So let me know if you're interested in that. Send me an email. Hopefully we'll get a chance to talk about that, and I'll be back with you guys, I'm hoping, again on Thursday. See you then. Bye.